Welcome back to the Blockware podcast. And this is an interesting discussion we've got this week because at Blockware, we have what I think is probably the single best opportunity in Bitcoin mining right now. And honestly, one of the best opportunities I've seen since being in the space. And Danny, I want to start with you. Can you tell us a little bit about the S21 Plus and what Blockware is offering?
Yeah, absolutely. I think you nailed it, Mitch. We've been in this space for a long, long time, and this is certainly one of, if not the best deal that we've seen in quite some time. So yeah, the deal is for S21 plus Bitmain units. Um, these units operate at approximately 230 terahash and 16.5 watts per T. So they're very efficient units. And you want to be accumulating efficient units that'll have long time staying power, good profitability, at time zero. Uh, but a lot of this is always a function of price as well. And what's really unique about this deal is the price is exceptionally attractive. So I think we can unpack that and talk about some of the characteristics of this particular opportunity while we jam here today.
Yeah, I'm excited to jam about it. And one thing I think about is Bitcoin's down 20, 25%, whatever. But there's so many fundamental bullish catalysts and it seems that this is kind of the equivalent, to buy of buying the dip for the mining space, right? There was a little bit of delay between the Bitcoin price going down and then actually seeing sort of an equivalent opportunity open up in the mining space. So, can you talk a little bit about this discounted hardware and why that's so important when you're looking to get into Bitcoin mining?
Yeah, Blake, I'll tee this one up and then I'd love to hear your thoughts on this.
Yeah.
But yeah, I mean, as Mitch mentioned, um, Bitcoin mining hardware ASICs typically are priced on a lagging basis to Bitcoin price. And this is logical because Bitcoin price velocity is so high, it can whip around, very quickly, right? So it's all a function of supply and demand within the hardware space. And it takes a little time for a pullback or a run up to really set in for the demand to shift for acquisition of incremental hardware, right? So we've pulled back, to your point, Mitch, again, 20, 25% top line Bitcoin price. That means hash price, Bitcoin mining margins are down. So it's kind of the blood in the street type scenario where now demand for hardware has decreased and that has set in a bit now. And what we're seeing is some of these suppliers, Bitmain and secondary suppliers, primarily secondary suppliers, get a little bit over indexed on their inventory, right? These are typically sold in futures deals, large quantities, tens, $20 million type deals. And these commitments are made months and months in advance. So you've got, suppliers of these ASICs that are making commitments in Q4 on the back of exceptional Bitcoin price, positive price action, assuming that that price action is going to continue and the future demand will be even or will increase. So you've got all these suppliers with all this inventory, and then when the demand starts to subside a bit, you get what I like to look at as effectively like distressed seller deals, which provides an exceptional opportunity for organizations or individuals who are patient and well capitalized to pounce and do the classic, Rothschild buy when there's blood in the streets kind of play. Right. So, like, maybe you can expand on that a bit.
Yeah, for sure. And I think it's kind of important to contextualize the opportunity given kind of the broader landscape that we're in, right? Bitcoin related and not. And I think the story for 2025, or at the very least, March of 2025, has just been that the market is uncertain, right? For a variety of different reasons on, the rate side of the ball, on the, tariff side of the ball, on the policy side of the ball. All of these things have created a lot of volatility in the market, right? And turmoil in certain parts of the market where if you're a fund and you're not sure at all what the economy is gonna look like for the next 6 months or year or 5 years, then it might not make sense for you to hold on to what you consider like risk assets, right? So you might want to sell your AI stocks, your quantum computing stocks, your Bitcoin, whatever it might be. So I think that given that broader landscape of de-risking a portfolio, or at least kind of reining in your risk profile a little bit, we're starting to kind of see this spill over into the mining sector, which is always interesting. That kind of little bit of a lag period there, because mining is more tangible, it's more real world. This is, data centers and suppliers from around the world compared to, a 24/7 financial market like Bitcoin is. So to Danny's point, you've got suppliers that are maybe a little bit over their skis in terms of the amount of supply they're holding on to. And what this does is it creates excellent opportunities for people that are willing to, be certain when someone else is uncertain, right? Or the old, be greedy when someone else is fearful. It's kind of this same play where there's opportunities in the market to where if somebody else is not wanting to hold on supply or willing to sell things at below market prices and all of these kinds of factors, it creates a really excellent opportunity to where if you're bullish on Bitcoin like I am, and I think, pretty sure Mitch is too, it creates these, really exciting opportunities. And this one in particular, where, I mean, I don't know if I've ever been more bullish on Bitcoin in my entire life, right? For open Twitter and just read about what's going on in the world and in with this industry in specific, right? With the United States government saying they're never going to sell their Bitcoin. And are they going to buy more? Are they not? I have no idea. But there's just so many factors that are lining up to make me incredibly bullish on the long-term outlook of this asset. So when you get these kind of little micro periods where price pulls back, the mining market adjusts, and you can snipe really excellent deals that set you up to be successful for the long term, I think it's, a really exciting time to kind of be looking into this side of the market.
Yeah, I absolutely agree. And we could get into the reasons of why I'm bullish and why you're bullish, and we'll do that. But first, I want to kind of steel man this. Let's say you are concerned about the performance of Bitcoin, stocks, et cetera, over the next, say, 6 to 12 months. An interesting point you brought up recently to me, Blake, is that even if Bitcoin goes sideways over the next 6 months, like if you buy spot Bitcoin, your returns are flat. But if you're mining, you're actually consistently accumulating profit. So can you kind of expand on that idea for, let's play out this kind of bear scenario over the next year?
Yeah, for sure. I think mining effectively a Bitcoin accumulation strategy, but it's one that's a bit more capital efficient to kind of hedge your downside. So to unpack that, mining is effectively an arbitrage between how much do I pay for my power, right? You're buying physical servers that go in a rack in a data center, right? So the input is those things got to be plugged into a wall and powered with energy like your, laptop or your iPhone is, right? So its input is energy and its output is Bitcoin, right? Satoshis. So all it comes down to is what does it cost me to produce X amount of Bitcoin? So you can go to Coinbase or whatever exchange you want to use, and you could buy one Bitcoin for whatever it is right now, 85,000, or you could spend X amount on electricity, depending on what your rate is and what kind of machine it is, and get generally with highly efficient hardware like the S21 pluses we're talking about, a lot more Bitcoin than you otherwise would by just going to the spot market. What that does is it gives you some wiggle room, right? So if I'm accumulating Bitcoin by mining at an effective price of $60,000 a coin, for example, well, I can stomach a much larger pullback than an individual who's just kind of throwing $1,000 or $10,000 or whatever they have at Bitcoin when they can, right? So it kind of removes that idea where if your strategy is solely to just dollar cost average Bitcoin when you can, or make a lump sum purchase when you get your yearly bonus or whatever, your strategy is, in that route, you're 100% exposed to the spot price of Bitcoin, right? For better or for worse, which a lot of times is great. And a lot of times, if that's been your strategy in 2025, you're down, 15, 20, 25%, something like that. So it kind of removes a lot of that uncertainty, right? Unless you're going to go and hedge your position in some, way, which I don't think many Bitcoiners do. Maybe on more on the institutional side that might make more sense. But mining kind of removes that uncertainty because I have wiggle room, right? When Bitcoin goes sideways or down, miners are, still doing great, right? Assuming you have efficient hardware and you're not, plugging these things in your apartment in Los Angeles and paying 20 cents a kilowatt hour for your power. You're crushing it, right? So, and then on the flip side, when Bitcoin takes off, it's even better, right? The margins expand exponentially. You can see appreciation in the value of hardware, relative to supply and demand and things like that. So it kind of just allows you to accumulate Bitcoin in a more capital efficient way, meaning I'm getting more Bitcoin than the amount I'm spending each month. And it just, like I said, removes that kind of uncertainty, our customers are still making money in this period where Bitcoin's down 25%. And I think that's a pretty cool thing.
And maybe to expand on that real briefly, the way I like to think about it is if you are a long-term holder of Bitcoin, you generally don't care as much about these short-term price fluctuations because you have conviction that over long enough time periods, the dollarized value, price of Bitcoin is going to increase significantly. So in this example, I don't really care about what the price of Bitcoin is today. I don't care what my aggregate dollar value of the Bitcoin that I own is because I am exceptionally confident that in the future it is going to be higher. Now, what I care about is the price that I can accumulate incremental Bitcoin, right? And the best way to accumulate Bitcoin at the lowest price on an ongoing constant dollar cost averaging basis is to mine Bitcoin. Because to Blake's point, what you're doing is you are, basically arbitraging energy and therefore creating Bitcoin at a material or significant discount to the spot price of Bitcoin. And that's a spot price of Bitcoin when it's pulled back 25%. If I can acquire Bitcoin at $50,000 to $60,000 right now, that's spectacular. It gives me peace of mind because I am, again, confident that the price of Bitcoin will increase significantly in the future, right? So, and it gets even better as you look at like this particular opportunity, because when Bitcoin price pulls back and it starts to settle into a new range, to our earlier discussion, the price of ASICs for patient buyers decreases. So what that means is it gives you an opportunity to accumulate more hash rate at a lower price to acquire the servers which create that hash rate. I'm making a more capital efficient, investment, capital allocation, right? And then I'm good in the meantime because I'm still creating Bitcoin well below the spot price of Bitcoin. But what's great is when Bitcoin price starts to recover, my returns on the upside start to compound, right? Because I was able to acquire these units at a discounted price, which afforded me the opportunity to accumulate more hash rate than I otherwise would have at Bitcoin at, $100,000 or above. And then as Bitcoin gets to 100,000 or above, and or above, I still have that benefit. I'm still creating Bitcoin at 50, 60, $1,000, but that spread increases. So it enables me to weather these storms with comfort. To Blake's point, I'm making money on an ongoing basis by arbitraging energy to accumulate Bitcoin at a discount to the spot price of Bitcoin in down markets, in sideways markets, and then I get the compounded additional benefit of the hash rate that I've accumulated to acquire even more Bitcoin as the price appreciates, right? So I focus on how can I acquire Bitcoin at the cheapest price, and how can I acquire the machines that enable me with that opportunity at the best possible price so that I can accumulate as much hash rate as I can And the opportunity to do that comes when we get these pullbacks. And in this case, Blockware has acquired a significant number of very efficient machines, which we are selling at a highly discounted price, affording that opportunity to our clients.
I think that was really well said, Danny. And for the audience to sort of visualize this, I pulled up a chart here and you could see the Bitcoin price in black, right? And if you're just buying Bitcoin with a traditional dollar cost average approach, late last year, you're buying it at 65, 70K, and then up to 90K, 100K. But if you are mining with some of the next generation machines, this entire time you've been buying Bitcoin at 40K, 42K, 45, 50, right? And so over a long period of time, being able to accumulate Bitcoin at a discount by mining, you're going to most likely outperform just a traditional approach. And I want to kind of get into the specific details of the S21 Plus, which is primarily what we're here to talk about today. And then this table, I have the S21 Plus pulled up, and I'm comparing it to some of the other Bitmain machines, the S21 XP, the S21, the S19. So Danny and Blake, can you guys talk a little bit more about just the specifics of the S21 Plus opportunity?
Yeah, I can hit this one. I think if you're someone who's brand new to mining, I think that the easiest way I think to kind of start to wrap your head around one, understanding what the different models of machines are and what their differences are, I think is kind of the important place to start. So then you can understand like why is this a good deal, right? And to your point, Mitch, starting to visualize why this is a good deal. I like to think about ASICs kind of like a car, right? You've got really two things that matter, right? You've got top speed, right? And I guess if you're like me, you care about top speed, maybe not. But for ASICs, you care a lot about top speed, right? And that's effectively your hash rate. How fast can this thing go? Hash rate is on a 1-for-1 ratio with how much Bitcoin will this machine accumulate for me on a daily, weekly, monthly basis. So the hash rate is the top speed, but the thing that matters maybe more is the efficiency, right? Or your miles per gallon, or in this case, it's maybe gallons per mile, however you want to think about it. But it's saying for that top speed, how much is it going to cost me to get there, right? So for an ASIC in an ideal world, you want something with high hash rate, but a lower watts per terahash efficiency rate, right? How many watts or units of electricity do I need to consume in order to produce each unit of hash rate or of revenue? Now, ASICs, we tend to value or price on a dollars per terahash basis, right? So if you look at this chart, that's fourth line down, dollars per T. That's just gives you a really easy way to look at, am I getting a premium? Am I getting a discount? How are these things actually priced, right? Because saying an ASIC is $1,000 or $10,000 or $5,000 doesn't tell you anything unless you understand what am I actually getting for it. So if you look at those three columns on the right, the S21 XP, the S21, and the S19 XP, you can see in that second column, there's varying degrees of efficiency, right? And the lower number means it's more efficient. It needs less electricity to produce its hash rate. So generally, you would see that a more efficient machine with a lower efficiency rating has a higher dollar per terahash cost to it. What we can see is like an S21, for example, is kind of your upper middle of the line machine, right? That's of the new generation. It's kind of that base model. It's put, set up in a position to be very successful. It's not the most efficient machine money can buy, but it's priced really well relative to what you're getting for it. You can see that the S21 Plus, the machine we're talking about, on an efficiency standpoint, is very close to the S21, right? It's like 1 watt per T difference, which makes an impact, but it's not going to like make or break whether or not you were, super successful or not successful at all. The difference is that the S21 Plus is, kind of given the context of where this market is in distressed sellers, is actually at a, lower dollar per T cost than the S21. It's a more efficient machine that's actually cheaper to acquire on a dollars per terahash basis. So kind of putting it into the context of, here's how machines are generally priced, which is based off of efficiency. And here's why this is such, a dang good deal. It's because it's not priced in line with comparable units. It's actually a little bit cheaper. So it lets you get, more hash rate overall on a, if you're looking at spending $5,000 on this model, that model, or another model, you're going to get the most hash rate with the S21 Plus, and you're not really giving up, a lot of efficiency to do that.
Yeah, that was well said. And Danny, the floor is yours if you want to kind of elaborate on that.
Yeah, I think Blake hit it, really well. Maybe just specifically about this deal. So I think this chart puts it in good context. Uh, this is a deal where Blockware has acquired approximately 1,500 of these units. When we make a deal like that, we get significant economies of scale on our buy side. And we're buying when there's blood in the street from suppliers that have over indexed on their inventory that need to start to get some cash flow in on those units that they made a commitment for months and months and months ago. For context, Bitmain, the actual manufacturer of these machines, are selling these for something like 13 to 17% higher on a Q2, Q3 delivery basis, which means that you can go to the manufacturer, in theory, if you can get through that spider web, and you can acquire these machines and for a higher cost and have them plugged in let's say July, right? In the deal that we've acquired these units and they're going to be plugged in less than 1 month, being the average, and they're at a 13% discount, right? So for those that listen and watch that are very familiar with this space, we can't answer the phone fast enough because it's like, oh my God, I can't believe this is out there. For those who are newer to this, it's just important, I think, to understand that the macro environment is very uncertain right now. We've got tariffs, we've got interest rates that are a little bit uncertain. That is creating, obviously, sell-off in risk assets. That is creating opportunities. We have seized that opportunity, and we are affording that opportunity to our clients, prospective customers and existing customers, to acquire these units at a material discount to what the manufacturers are actually selling these at, right? And if we go back in history here, if we look at maybe the 2023 lull to the early 2024 run up in Bitcoin price, folks who are buying, in equivalent like opportunities often make their money back in like 6 months when the price of Bitcoin goes crazy. And with Blockware's ecosystem and our marketplace, you retain liquidity on that asset, right? So what does that mean? Now, this is like crystal ball getting kind of cute with it. Acquire a bunch of hash rate right now while there's major discounts on ASICs based on uncertainty in the market. Bitcoin price recovers. You now have a lot more Bitcoin that you're able to acquire than you otherwise would have. That will make you your money back faster. Again, this is a hypothetical bullish scenario based on historical, bullish scenarios. You've, recovered your CapEx, or at least a material portion of that, faster than you otherwise would have. And you have the option, but not obligation, to then seek liquidity on your actual unit, because these units will be valued at a higher price when Bitcoin is at a higher price, which is logical because Bitcoin mining rigs are basically like dividend paying assets. And as the dividend value increases, meaning the value of the Bitcoin that is being produced increases, it's logical to think that that machine would increase in price, isn't it? All right. So to kind of put a bow on it, this is certainly one of, if not the best opportunities that I've seen in the last probably 24 months. If you're medium to long-term bullish on Bitcoin, you're going to be salivating when you see this opportunity. And, we're running pretty aggressive plays. We're pricing these things to sell. We want to make sure that, we realize that we basically sell revenue generating assets. And when folks succeed, those are our best future customers. So we're making this kind of co-investment by providing this opportunity and going long on this opportunity to enable folks to be successful, which by and large leads to more success for us as well, right? So I'll stop there, but I think this is something that we would love to talk to folks about. And if this is of interest, let's jam.
Yeah, I think you guys hit the nail on the head there. And we can wrap up. I want all of us to share one reason we are bullish over the next 6, 12, 18 months. And I'll start with something that I think is maybe a little unorthodox, not mentioned as much, which is the SAB 122 regulatory change, right? That was a staff accounting bill from the SEC that overturned a previous bad staff accounting bill. And long story short, this enables every bank to offer Bitcoin products. And I think over the next few years, Bitcoin, we've seen it kind of de-risked historically with the ETFs and with Larry Fink going on and being a vocal Bitcoin bull with the White House embracing it. So I think we're going to see kind of a levy of Bitcoin products come to the market through banks and these other institutions. So that's one reason why I'm kind of long-term bullish, but I'd love to hear you guys kind of expand on something.
I'll piggyback on that. I'm bullish, in that context, on the fact that if you look at Bitcoin price appreciation, it's all a function of disruptive technology adoption, right? And so the more adopters that you get, the higher the price of Bitcoin goes. And if you look at any disruptive technology adoption curve, the internet, cell phones, right, it looks like a hockey stick. And now I look at who are the adoption kind of constituency. What are those buckets? You have retail, you have uh, corporations, let's say institutions, and then you have governments, right? And as you go down that curve, the velocity in which they're able to adopt, how quickly can they go from non-adopter to adopter, decreases, right? It's like turning an aircraft carrier, getting governments to accumulate Bitcoin, to not sell their Bitcoin, to acquire incremental Bitcoin. That takes a lot longer than me as a sovereign individual, slam buying Bitcoin or buying Bitcoin mining rigs, so on and so forth. But these tides are turning. And when this aircraft carrier gets turned, you can't fathom how exceptional this adoption will be and what that will do to price. And right now, we have a sitting president of the United States, actually today, addressed the Digital Assets Summit in New York City, and basically got on a podium and said, like, the war on crypto is done. We are establishing a Bitcoin strategic reserve. We are holding the Bitcoin that we own. We are giving a green light to extremely astute Bitcoin bulls that are in my administration to come up with creative, cost neutral, read between the lines ways to accumulate incremental Bitcoin. So we've seen what retail adoption can do, because that's basically Bitcoin from, inception to right now. When we see nation state adoption, and when we see corporations starting to play the MicroStrategy playbook, which is increasing by the day, number of entities that are acquiring Bitcoin and holding it on their balance sheet, zoom out, right? 6 months, 12 months, 18 months from now, it's going to be a whole different ballgame. And those who are going to be positioned best are going to be those who have the lowest cost of Bitcoin accumulation on an ongoing basis, that can easily stomach the short-term volatility, acquire Bitcoin at the lowest price, and be in a position to accumulate the most Bitcoin that they can hodl for that, Valhalla moment. All right, so pass to you, Blake.
Yeah, for me, it's probably like the institutional sentiment around Bitcoin that has shifted so much in the last, year, but looking back across the last 5 years and how far things have come. Because if you look at the stock market, for example, 80% of the capital that's fluctuating around the market is institutions, right? And if you want to be involved in a Nvidia run, Apple run, right, a decade long run where you can make a lot of money, just buying and holding and sitting on the sidelines, then you need institutional capital and more funds kind of piling into a space, right? And I've mentioned this before on similar podcasts, but if it was 5 years ago or 6 years ago when you were an analyst or sitting on a trading desk in New York or whatever, and you were to propose to your boss that, hey, we need to start accumulating some amount of Bitcoin, right? Or we need a strategy surrounding this asset, you would have been laughed out of the room, right? And now if you're involved with a financial institution and you work on a trading desk, you have to have a strategy about at the very least, like, how are we going to handle this thing that's soaking up so much capital? Or if you're an LP in a fund, or you've got your money with Fidelity, right? You're gonna ask, hey, what is our strategy to have some sort of directional exposure to this asset? And if they don't have a plan for it, or they don't plan on accumulating it, then a lot of people are just going to move their capital elsewhere. So it's kind of this game theory of institutions being forced to, at the very least, have an idea of how they want to approach this asset, even if it's, hey, we're going to look at it and we've decided it's best for ourselves and our clients to not get involved with it. At least they're looking at it, right? So when you kind of combine that side with, to Danny's point, the world governments, the sovereign wealth funds, who are seemingly kind of in the same boat, right? If not already accumulating the asset, I find it really, really difficult not to be bullish on Bitcoin over the next, forever.
Yeah, I love that, Blake. I'll say something to that real quick. Is institutions are either actively developing their strategy to accumulate Bitcoin, or actively developing a strategy to have a pretty damn good excuse as to why they're not doing it. But everybody's paying attention.
Yeah,